Hello and welcome to Gold and Silver Assets. It's Sunday the 23rd of August 2020. So I'll start by letting you know that the membership area is now up and running for those who are interested in receiving bonus content. If you're interested in joining, then just click the blue join button, or if you can't see that, then I've also included a link in the description below. Last week, someone commented on their thoughts about US Treasuries. The gist of the comment involved some doggy-doo and a bag. Anyway, it was quite an amusing comment. I've also heard people say, look, what's the big deal about the debt? America's such a big economic powerhouse, surely they can support that debt. There are multiple angles to look at this topic, and so I'm going to split this into multiple parts. So this is part one. The official number for the US national debt is $26.6 trillion. It's worth looking at the Debt Clock website, which shows just how fast these numbers are rising. In fact, this screen grab is already well out of date. But just how big is a trillion? It's such a large number that it can become quite abstract to think about. So a trillion is a million times a million. That's 1 with 12 zeros. That's a lot of zeros. A trillion seconds is 32,000 years. If you stacked a trillion pennies on top of each other, they would be 870,000 miles high. So that would take you to the moon, back to the Earth, and then back to the moon again, and you'd still have change left. So when you have budgets including such huge numbers with so many zeros, I think it just becomes really difficult to fathom what exactly is going on. To put things into perspective, I thought I would look at the US government budget as if it were a regular person. As an anchor point, I've used the government income of $2.82 trillion and the regular person's income of $34,000. And I've used this ratio to calculate what I'm about to present. Before I proceed, though, there are a couple of things to note. Firstly, I did find a lot of variation in the reported figures, but that doesn't matter too much. It's really the magnitude and overview that I'm interested in here, so don't get too hung up on the exact numbers. I'm also not an accountant, and so if I have made any huge errors here, then please do point it out in the comments. If US spending annually is $5.63 trillion, then the equivalent regular person is spending $68,000 a year. How is that amount spent? Well, here I've listed some of the larger expenses. Payment on loan interest is $5,500 roughly. Social Security is about $15,500. Medical care is about $17,500, and $10,000 is spent on defence and security. Overall, we can see that the spending is roughly twice the income. The regular person's debt would be $332,000 in terms of bonds. But the big one, of course, is the unfunded liabilities such as Social Security and Medicare. And this comes to a whopping $1.85 million. What about the assets? Well, in terms of government assets, this is where I thought there was a bit of a grey area, because it depends on what you count as assets. I based the figure here of 41,300 on the assets shown here in this pie chart. Now note that this doesn't include things like US national parks or natural resources. But then again, I think that would be like calling your own home an asset, which I don't think it should be considered an asset because you rely on that to live there basically. Unless of course you're happy to downside based on the market movements. I don't think America selling the Grand Canyon to a foreign entity to pay off debt would be particularly palatable. Anyway, I admit that this number could be argued with, and I'm not totally clear about this, but based on this pie chart, about half of US government financial assets, at least, are in the form of student loans. You'll see that reserve assets account for only 3.2% of the total. And these reserve assets are quite interesting as well. So according to this, the regular person would own 3 ounces of gold. At today's value, that would come to around $6,000. But note that the government values it at $42 an ounce. Other reserve assets include SDRs at around $600, IMF reserves at $369, and foreign currencies at $502. Just stripping everything back to the basics, if the government was a regular person, then their income would be $34,000. They would be spending each year $68,000. They have assets or savings of $41,300, and their liabilities are a whopping $2.17 million. I know that there are other factors to consider that does make US debt attractive to investors, but the aim of this is to simply strip things back, getting rid of all those ridiculous numbers of zeros to get an overview of the state of the budget. Look, I'm not just picking on the US here. A lot of sovereign budgets look like this, or even worse in some cases. Would you lend your hard-earned cash to this person? Next up, the market update. We'll start with gold priced in US dollars on the weekly scale. Last week we talked about this bearish engulfing pattern with these 2 candles here, and this week ended with this candle. So it's a red candle with a very, very tiny little body here and a long upper wick. So that too, combined with this bearish combination here, makes me think there might be more downside to come. Also, if we look at the RSI, I've drawn this upsloping trend line here, and it looks like that's just about to break. So sometimes what I find is that these things can break before we get a break on the bar chart. So let's have a look at that. That's just something I've been watching now and then, but let's see if that pans out. If we do get a break of this upsloping trend line, so a break below 1900 US dollars, I'd be looking at support around this region here. But let's look at that a little bit more closely on the daily scale. So this is that upsloping trend line that I mentioned in the last chart. And if we get a break of that, I think we've got this zone of support over here at around between 1800 and 1740 US dollars. But in order to get to those levels, we do need to see a break of that. The reason I think that if this $1,900 level breaks is because we've got a lot of thin air over here. There's not much supporting it below this level. And the other possibility, of course, is that this upsloping trend line is strong and we get more consolidation before we move up. But as I said, on the weekly scale, it's not looking hugely promising. Let's look at silver priced in US dollars on the 4-hourly scale. And last week we had drawn this upsloping trend line. Price had dropped, just bounced off of that trend line, came down again. And also remember we were talking about this support and resistance zone between $26 and $28. And so last week what happened? Price bounced off of that lower support level and came up, and lo and behold, not only did it hit resistance at that upper zone level, which I'd drawn previously, but it almost came close to also testing that upper trend line. It never quite reached there before just turning around. And since then, we've just bounced a couple of times off that lower support level. To me, this isn't looking promising. We've got a short-term downtrend here. Potentially, this could go up again a little bit more. In which case, though, we've got a descending triangle, which could be bearish. What I think is any break of this lower support level at around the $26 level, that opens up the way for $24. And below $24, we've got a lot of thin air. There's not very much in the way of support there. And that would bring us down to around the $21 level. And finally, we will talk about the gold miners. And of course, last week we had some questions about whether my analysis last week took into account the news about Warren Buffett buying Barrick Gold shares. And I'd answered that before the market had opened on Monday. And my answer was that, yes, it's definitely very promising for the long-term gold price action. But it doesn't really influence my decisions between, week to week. So although intraday such news can cause prices to go up, it's not something that I think pushes prices necessarily in the coming week or so. And I found that on a number of occasions where you hear a piece of news and you try and decide what effect that's going to have, in the coming week. And what I found is that sometimes you can get some news that you think, yeah, this is going to make a huge difference to the price, and you just get nothing. Price just goes sideways like this and doesn't even react. Whereas other times you think it's going to cause price to go up and price actually goes down. It does the opposite. So I don't find it easy to actually interpret those kinds of things. So I tend to ignore those in terms of short-term moves. But yeah, I think it's very promising for our longer-term view and backs things up as to where we think the precious metals are going. It was interesting because when the news happened on Monday in the Eastern markets, the gold price didn't really do much and it actually went down a little bit. And it's only when the Western markets opened that things moved up a bit more, and that included with the miners as well. So we did see this move upwards here. Price tested this upsloping trend line, but then turned around again. It failed to stay up above there. And then price has moved back down again. We do have a lower high over here, but we don't yet have a lower low. So we need to wait for that confirmation before we look for further downside. I think that may well happen. And like I said before, I'm looking for price to go down to at least the 32 level. But it's still early days to interpret this. Let's wait and see. That's it from me this week. Don't forget to like and subscribe if you appreciated the time and effort it took to make this video. And don't forget to click the notification bell. For those who want extra material, feel free to join our membership area. All the best and see you next week. Bye.